Welcome traders. This is Sniper Trades. Welcome back to the channel. Today we're going to be going over the three things that markets do, and I will be answering quite a few questions that I got from the previous video. But I would like to give you guys a thanks because I am highly appreciated of the feedback that I got from the previous video. Please continue to like and comment and share so that those that are in need will see this video and they will get the help that they need. But before I cut into the chase, um, there was a few questions that I got. One of them was, "Hey Snipe, I shorted the DAX on Tuesday, and I got stopped out. What did I do wrong?" And I'm gonna say the same thing I said in my first video. You're still on the front side of the markets. Why are you trying to sell on the front side of the market? Excuse me. I got another question on the EuroCAD, and his question was, "Hey Snipe, I shorted the EuroCAD high of the day after the coil. They put the peak formation high in place and they came back and stopped me out." And I'm going to tell you the same thing. You're still on the front side of the day. Why are you guys trying to pick tops? Please stop. Reversal trades happen on the back side. There's also one thing that the both of you failed to recognize that did not present, and that is our lower low. Lower low is the recipe for the pump and dump. So if you're not on the back side and you don't get a lower low, there is no pump and dump. There is no short trade. Continue to sit on your hands until you're on the backside. Just because we break on the backside doesn't mean automatic reversal. There's a pattern that needs to be fulfilled. There's criteria that need to be met. Before we start, I'm just going to review what we haven't read once again. Peak formation plus coil equals parabolic. This is the parabolic formula for 3 session setups and 3-day setups. Front side equals trend. Back side equals reverse. The buy low setup is the dump coil pump. The sell high setup is the pump coil dump. Once again, lower lows is the recipe for the pump and dump. Higher highs is the recipe for the dump and pump. So let's go ahead and get to the chase. The markets can only do three things, and here's one of them. Let's just say that this is the previous day's high, and Asia gives us a peak formation low. London gives us a peak formation high. And the US session gives us higher highs the US session gives us higher highs for a dump and pump setup. A perfect example of this actually was gold on Tuesday. So we actually did get a peak formation low in Asia, a peak formation high in London, higher highs in the US session for the dump and pump trend continuation on the front side of that move. Now we were on the back side of the day. Asia was sorting into the low of the week, low of the day, and they broke on the back side of the day. We were on the back side of the day. So I'm expecting, or I am thinking reverse. So I'm just trying to keep it as simple as possible for myself so that I can execute in live time. So once again, this is actually a beautiful example of a trend trade. Let me grab my handy dandy tools here. I'm going to give you guys another example of how a trend trade could manifest on the day. It's very similar to what we just seen. It's going to involve the previous day's level. So let's just say this is the previous day's low instead. We get a peak formation high in Asia. Pay close attention here. Our peak formation low, London, our peak formation low in London, breaching the previous day's low, which triggers other time frame trades into the market. That being the recipe for our pump and dump template in our third session in New York. Now they could be pulling back before the New York session, and the New York session can continue to pull back, give us our M formation, head and shoulders formation, whatever formation you're looking for, a top formation, and then give us our trade at our level during the timing window. And this is a sell high scenario, a pump coil dump, which this will also be typically on the front side of the day, front side of the week. But since we're front side of the week, remember the tip that I gave you guys in my previous video. If you're front side of the week down, we talked about nat gas. If you're front side of the week down, I'm looking for back side of the day or session opportunities. Now I got a question that was asking, hey, can you show these on the chart? We will get to the chart. We're not going to be on the chart right now, but we will get to the chart. I just want to go over the basics before I get back on a chart. Clear up all the confusion and let you guys know you don't need all of the gobbledygook. You don't need to be the smart guy. You don't need to be the programmer. You don't need to be whatever anyone's saying out there. That there's a lot being said out there, even to myself. I ran against a guy that was telling me, he's on Wall Street and that retail traders are doomed, which they are. But he was telling me that there's no way you can win. Now I'm thinking in my head, well, I'm winning over here. So I don't know what he's talking about, but I do understand the masses. I do understand that the masses are having trouble with trading. 90% of traders fail, and the reason why is because one, they don't manage their risk. Two, they don't know what they're looking for. Three, they don't keep it simple. So that's three reasons right there. I can really give you 10, but just in general, this is an example of a beautiful trend scenario using front side, back side, using lower lows, higher highs, using peak formation plus consolidation equals parabolic, using the prior day's levels, using the buy low, dump coil pump or sell high, pump coil dump pattern. So once again, we just went over two trend trade scenarios on the up and down side, and these will typically be on the front side. So if you're on the front side, like gold, uh, front side of that that session, that day, giving a trend trade, breakout pullback trend scenario on our Free Cash Tuesday. Tuesday typically expands the range. So let's bring out our handy dandy tool once again. And we're going to go over false break reversals. Get it as clean as possible. All right. So I'd like to give a shout out to Richie L. You may have seen him in or under Stacey's comments. He is in my Discord community. Now I'm not shouting him out so you guys can go blow him up because trust me, that is not what he wants. But I'm shouting him out because he keeps it simple. He loves to look for the false break reversal high of day, high of week on any pair. Now he's typically trading gold. He may look at GJ. He'll look at the indexes. He'll look at oil. He has a few pairs in his basket, but the setup remains the same. And what I'm about to explain here, um, Richie L, in my opinion, breaks down really, really clearly. That now he uses the levels for 99.9% of his trades. I've actually never seen him trade from the inside, and I've never seen him not trade from a level. So let's say this is the previous day's high, and we get a P formation low in Asia, a P formation high in London that breaks the previous day's high. So what ends up happening here is they may break out again, fail, break down inside of the level. Now, the reason why I'm shouting out Richie once again, because one thing he will not do is pick a top. He will wait for the market to break down back inside of the range. And he will wait for them to pull back into the previous day's high for his trade, for his entry. Now, once again, I've actually seen him do this a million times, and it always seems so very simple. Now, it may be around that 9:30 equity market open. Most of the time, it's third hour and beyond. It may even be the fourth hour, but he keeps it very simple. He doesn't count pushes. He doesn't count levels. He doesn't do a lot of things. He's boiled his process down to the behavior price at the levels, the timings, uh, and he does take in consideration of the actual day he's trading. He looks for signal days. He looks for confluences. He keeps it very simple. But once again, I've seen him trade this a million times. I've seen him say this a million times as well. He will wait for it to break down first. He does not care about getting in up here. Now, you could get up here, but it better be on the backside. So, reversal trades happen on the backside. Let me go ahead and give you guys some emphasis here. Reversal trades not only happen on the backside, but you want to look for your lower lows which is the recipe for the pump and dump on the backside of the day, the session, the week, the month, the year, the quarter, the hour. This is fractal. Um, Breakout, fail, and reverse. Breakout, fail, and reverse. So once again, let's bring out our handy dandy tool. I'm going to give you guys another example, a dump and pump variation. And just a reminder, guys, we will be on the charts very soon. I actually cannot wait because I'm going to expose the market maker. I'm going to decode these markets. I'm going to decode the classified information. But let's just say this is the previous day's low. Let's say we get a high and low in Asia. London is inside. And New York takes out the low, gives us our triple bottom formation, higher high on the inside for the dump and pump. Once again, this will also typically be on the back side. I cannot stress this enough, actually, because traders are trying to pick the bottom, which is fine. But what's not okay is doing so when the market is still in a downward movement, in a downtrend. Lower lows equals pump and dump. When it is obviously still moving down, you don't want to be trying to pick that for a buy setup. You need a dump coil pump setup, a pattern. But once again, this is what we're looking for. And I'm going to quote Richie once again. He does not care about all of this. He does not care about all of this. And as a matter of fact, he could care less about the peak formations, give or take. All peak formations is are session highs and lows. We're technically all doing the same thing. He just doesn't call it peak formations. He's just looking for the behavior price on the day, after a signal day, after a Tuesday, after a Wednesday, after a Thursday, after a Friday, even on a Monday. And he has his pairs that he will typically look for. And he knows where his trades will present because, once again, I have never seen him ever not trade from a level. So if that's one thing you guys can take from this video today, do that. Stop taking entries that are not at levels. Now I'm going to have a video about entries because that is the most asked question I get. And I'm just going to tell you right now, You don't have a problem with entries. You have a problem with risk management. That is your issue. Because I get questions, hey, Sniper, I took this trade and I got stopped out. And then I tell them, me too. I got back in though, and I ended up getting my trade. I manage my risk. I take small losses, big wins. I look for big risk to reward ratios, 1 to 3, 1 to 4, 1 to 5. I'm more of a scalper, so I may typically be aiming for more, 1 to 8, 1 to 10. I actually got 10R yesterday on gold, even though it wasn't as great as silver or platinum. With my risk management skills and the way I look for entries, because I'm typically not even looking for an entry. I'm doing the reverse. I'm looking for a stop loss, which ironically gives me a fantastic entry, and my risk to reward is just phenomenal. 10R, 15R, 20R, 100 pips, 150 pips, 200 pips, 300 pips, etc. But once again, look at this pattern. Look at the levels. Look at the timings. Let's just say 9:30, open down low. This red separator would be our New York Open. New York Opens, they're not going any lower. This is also one thing to pay attention to. If the New York market opens or the equity market opens and they stop going higher or stop going lower, that is the dead giveaway, especially when you're at the higher low of the day, slash week, slash month. That is the dead giveaway for a scenario where you can look for the backside and look for your higher high dump and pump or your lower low pump and dump. So once again, let's bring out our tools here. It's summer, so I got plenty of water guns for anyone who wants to battle. No pun intended. Okay, now we're going to talk about the last scenario being the trading range, which I'm going to just go ahead and say, and this is my perception of how I do things, my process. The only time you will not have a bias is when you're in a trading range. So if I'm in an uptrend or if I'm on the front side, I'm looking for a trend trade. Now, that doesn't mean I will get one, but I'm not trying to figure anything out. This is the issue here, guys. You guys want the final result, you guys want the answer, and the answer is your process. You're looking for certainty. You will get that with your process. When I'm on the front side, I'm thinking trend. That is it. When I'm on the back side, I'm thinking reversal. That is it. Pump, coil, dump, coil, pump. Higher highs equals dump and pump. Lower lows equals pump and dump. Dump before New York Open. Think pump. Pump before New York Open. Think dump. A beautiful example of this is also gold in the London session on Tuesday. Monday gave us our opening range high and low. Tuesday in the Asian and London session, as a matter of fact, Asia gave us our peak formation low, and New York jammed back into that peak formation low for the buy low setup. The dump coil pump down low, low of day, low of week, back to the high of day, high of week. New York broke the previous day's high, gave us higher highs for the dump and pump template, the breakout pullback trend scenario. But the market can only do three things here, and there's only two types of trades. You have trend trades, you have reversal trades. You have front side, you have back side. You have higher highs and you have lower lows. So the confusion is not the markets. The confusion is yourself. The confusion is your unwillingness to wait for a best trade setup. Although the cheetah is one of the fastest animals in the animal kingdom, it will wait for the lame or weakened antelope and strike only when it is 100% certain that it will reach its target or fulfill its criteria, fulfill its means to get what it is hunting for. So we are the cheetah. We can buy or sell in the click of a button, whether you're using automated systems or whether you're using your phone or your desktop. Now, that doesn't mean that, since we could, or in our day and time, excuse me, in our day and time, we can just open a chart on our phone and press buy or sell. Just because we can do that with the speed does not mean to just do so. We're looking for the weakened or lame antelope. We're looking for consolidations up high or down low. We're looking for 3-day setups, 3-session setups. We're looking for the three things that markets do: breakout, pullback trends, breakout, fail, reverse, or stay in the trading range. We're looking for our levels because the market will trade. The market will trade from one of these three levels. Your entry will be from one of these three levels. It may be a breakout, pullback, trend. It may be a breakout, fail, reverse. Whoops. We may also be pumping back into the closing price for a pump and dump setup. We may be dumping back into the closing price for a dump and pump setup. We may even just be consolidating and closing price is our 50% level, and it will trade from that 50% level, giving us a potential range expansion when they finally break out of the box. Closing price could be a level of support or resistance, and also give us a reference point on who's in profit and who's trapped, whether that was yesterday's closing price, a prior day's closing price, last week's closing price, last month's closing price, which I do use these levels. I have an indicator in my Discord. I got this question. Hey, what indicators are you using? I have my own indicator in my Discord. When you join in the search tab, in the search bar, listen very carefully because I get this question a lot. Where do I find it? In the search bar, just type indicators. It's called the sniper indicator. There's also a few other indicators that was developed by one of the fellow traders in the community, Yanni. Thank you very much once again. But I will have a video very soon on the charts of my setup, how I use the indicator, what levels I'm focusing on, what pairs I'm focusing on, the major round numbers, which I'll make a separate video of that because that is also a criteria for me on how I enter the market. Now, it's not necessary But for me, it is because I'm using reverse psychology the majority, or if not for every aspect of the market. I'm looking to buy the bear candle. I'm looking to sell the bull candle. I'm looking to look for the pump if they dump it before New York Open. I'm looking for the dump if they pump it before New York Open. Lower lows equals pump and dump. Higher highs equals dump and pump. I'm just trying to keep it simple at the end of the day. I look for simple patterns. For example, we got this on the Euro Aussie and the Euro CAD. If you guys remember my first video and the drawing that I drew out, the pattern, I called it the master pattern. I said, hey, one second. I said, hey, this pattern can set up over 3 days. This pattern can set up over 3 days, 3 sessions, 3 months, 3 hours. Euro Aussie on Monday gave us a peak formation low in Asia, a peak formation high in London, and on the back side of the day gave us lower lows on the inside, which is the recipe for the pump and dump. Another pair that did this was EuroCAD yesterday. Same pattern. And I guarantee you, we're probably going to get the same pattern somewhere today, Thursday, or maybe even Friday, maybe even next week on Monday. I guarantee it. This 3 session setup, 3 day setup, 3 week setup, 3 month setup, 3 hour setup happens all the time. And it's actually pretty funny because I came out with my video and then on Free Cash Monday, what did they do? What did they do yesterday? What are they probably gonna do tomorrow? So keep it simple, traders. That's all for today. I just wanted to go over some basics on the 3 things that markets do. Keeping it simple, looking for simple patterns, cherry picking the levels, because when it comes to entering the market, it's not rocket science. I'm just looking to get in at a level, previous week levels, previous day levels, previous month levels, previous session levels, even, because you won't always perfectly get a level, but there's always a level that you can look for to get in that trade. So please leave a like, comment, share, join my Discord. Thank you all. I will see you all in the next video. The next few videos, I'm going to be breaking down a few more basic, simple concepts before we get back on the charts. Because when we get back on the charts, I'm going to get real nitty and gritty. We're going to break down a lot of confusion. I'm going to break down the 3 session templates that I look for, the 3 day templates that I look for, the specific rules that I have in place for those 3 session and 3 day setups. Because there's rules, there's variations of these 3 session setups. It won't just set up like this every time. There's other variations. We'll go over that. If you're in my VIP, you already know what I'm talking about. Box templates, inside session templates, stair steps, outside session templates. We go over this all the time. Just because you get a signal day doesn't mean automatically trade the next day. You know, traders will say, oh, first red day, and then they give us a low of day short squeeze at the low of the day in the New York session, and then they complain. but they're failing to realize what's happening on the day itself. Is it a pump and dump template or is it a dump and pump template? On the first red day signal, you can actually get a dump and pump template the next day. You know, your session may just be the short squeeze. They didn't pump it up for the dump. Vice versa. They didn't dump it down for the pump. That's what you're looking for on a textbook. First red day, first green day. You also want to be on the backside. You may also want to have a previous day level breached. And most importantly, you just want to keep it simple. So once again, thank you all for watching. I'll see you all in the next video. May the markets be with you all. Blessings to you all and peace.